المؤتمر، وهي تحت اسم تحديات التقنيات المالية والرقمنة. اسمحوا لي أني أستضيف وأستدعي اللي رح يكونوا هلأ على البانل: مدير الجلسة ستيف واليس، مدير التوعية لمنطقة الشرق الأوسط وشمال إفريقيا، مؤسسة التحليل المالي المعتمد CFA. جون تيرنر، المدير التنفيذي لمنظمة XBRL International. فيصل بليزيد، رئيس تطوير الأعمال والمبيعات ناسداك. كاتريونا مارشال، محلل السياسات منظمة التعاون الاقتصادي والتنمية OECD. أحمد طنطش، المدير التنفيذي جورد انفست. وكاريل زاكوريكي، رئيس العمليات بإكزاكت برو. أهلا وسهلا فيكم جميعاً، وهلأ رح نبدأ معاكم هاي الجلسة.
Okay, that's better. Okay, well, thank you everyone, and welcome to this panel. So this panel is on challenges of financial technologies and digitalization. So I've got a great panel, very different backgrounds. So what I'm going to do is let each one of them introduce themselves for a couple of minutes. Then I'll open it up, I'll start asking some questions. But at that point, please interact, ask us questions as well. I know the last panel set us up very well in terms of a lot of questions about blockchain, technology, and certainly what this panel's about. So don't be shy. So if I start with my far left with Faisal Belizid from Nasdaq Technology. And I think he's got a video to show first.
Yes. Thank you very much for the introduction. Thank you for having me today. I'm honored to be here and represent Nasdaq. Dr. Jali, thank you very much for the invite yet again. I have a video that would introduce what we do at Nasdaq, and I think it envelops exactly what we want to tell the audience. And it's only 1 minute long, but it can be a little bit loud. So if we could ask the operators, please, to play it.
Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity. Cloud computing providing endless capacity. Blockchain making transactions safer and faster. New markets, born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. Nasdaq. Rewrite tomorrow.
Well, thank you. I'm not sure if there was people could hear that clearly, but the message is that we are traditionally a stock exchange, but now turning into a technology company that basically drives the future of financial markets, but also sets the pace for tomorrow in terms of penetrating new industries that are non-financial. So I guess my role here today would be to talk about the technology part of the ecosystem and how that hand in hand with regulation can create the best opportunities for advancements and for development for our industry and beyond.
Great, thanks Faisal. And Kirill Zagoruko, who's the COO of ExactPro. Well, I think you've got a short slide to show as well.
I've got a couple of slides, yes. If I can have the magic, clicker. So I think okay, hello everyone. I would like to thank also for the opportunity to speak at this esteemed conference. Thank you very much to UESA and Mr. Jalil Terf for inviting ExactPro to attend and speak. My name is Kirill Zagoruko. I'm Chief Operating Officer of a company called ExactPro Systems. No, it's not working.
Yep, there you go.
Oh, okay. So, as a means of introduction, let me give you a few quick facts about ExecPro. We are a specialist firm focused on software testing for mission-critical technology that underpins global financial markets. Among our clients are some leading exchanges around the world, clearinghouses, depositories, and other market infrastructures. We started as a company in 2009. We only had a core team of 10 people at that time at ExecPro. Everybody on that original team had years and years of prior experience with software testing, and over the years we've grown quite a bit and currently employ around 560 specialists. We are headquartered in the United Kingdom and have operations there, and we also have staff and operations in the United States, Georgia, and Russia. For 2 years, 2.5 years actually, we were part of the technology division of the London Stock Exchange Group. At the beginning of last year, we completed a management buyout, and we're an independent company again now. And we have a multi-year contract with LSEG to continue testing their technology. We have quite a few clients around the world, from North America to Europe to Asia and Africa. As a company, our motto is build software to test software, meaning that we have a very strong software development capability within our company and have developed bespoke tools for testing our client software. And it's a broad range of software that we've developed, from software that helps us test trading applications and systems to post-trade systems, doing functional and non-functional testing, technical testing. We are focused on testing both the trading and post-trade areas. On many of our projects, we have developed integrated automated testing solutions to test post-trade systems end-to-end. And I'm going through the slides very quickly. We are experts in non-functional testing, meaning capacity, stress testing, failover, latency measurement, etc. We have partnered with R3 Hyperledger to do some research in the DLT-based trading and post-trade areas, and we have developed a post-trade case study based on open source Corda and Hyperledger technology recently. We're also members of fixed trading community and FIA. And in terms of research and development, we're also developing a Cradle test database for machine learning. So we're quite active in, researching the AI as well within our company, and we'll see where it leads us in the future. And we also, I'm sorry about that. We also organize software testing conferences for people in the industry. It's not only software testing, but also trading technologies and all kinds of innovations in the industry. A lot of people that we work with in the industry come to our conferences, and we have external guests, many external guests as well. And the next conference will take part in September in London. So that's very quickly an overview of our company. Thank you very much.
Great. Thanks, Kirill. And then on to you, John, I think, for the last slide version presentation. So John's the CEO of XBRL.
Sure. Thank you very much, Steve. And thank you to UASA for the opportunity to speak today. It's a privilege to be back here in Jordan, and congratulations on the event. So I run XBRL International, and XBRL International is a standards development organization. The XBRL standards are used to capture information from typically regulated entities and provide that information in a structured form to regulators and to markets. A lot of that information covers private companies, so business registrars collect this information. An awful lot of the data covers information that never sees markets. Central banks use the standards to collect huge amounts of information to be able to make decisions about where they put their resources. But fundamentally, what we're about is helping regulators move from a paper paradigm to a data paradigm using standards. The standards are open and freely licensed, and today 157 mandates exist around the world in more than 70 countries, covering around about 30 million companies that provide information in a human and machine-readable format. Now, all right, what's all that about? Well, it goes to the heart of digitization, and perhaps it might be sensible just to give you a glimpse of what that looks like so that you can understand it if you've not come across the XBRL standard in the past. So if you wouldn't mind putting up the web page, please. So here we have a sample XBRL, specifically inline XBRL document. You can see that it looks and feels like a PDF document. In this case, it's the annual report of the GLIFE, the LEI Foundation. And a lot of that information is highly graphical. It's got lots of information. It's got pretty pictures in it, and is exactly what you might expect in a company disclosure. When you get down to information, and we could stop around about there, and yep, let's stop there. This looks more like a financial disclosure. So whether the information is text or numeric, and certain other kinds of information, you can capture that information in a way that is both human and machine readable. So if you were to click on any number for me, please, you can see here that we've got liabilities due to board directors. All right, well, there's a specific concept. It's a very interesting one. And as it happens, it's one that's specific to this particular company. But that information is in a digital form that can be consumed by machines. Today, in markets where this information is already available to markets, all of the smart money uses this data. This information is freely available in a number of markets. In other markets, you need to pay for it. The data providers, Bloomberg, as well as their competitors, consume this information and use that information to simplify their processes. But of course, you can pick that data up and use it yourselves directly. One of the advantages of doing so is that you can provide that information in a number of forms. This has got in fact, if you click down to do me a favor and click down to current liabilities there further down, which is an IFRS concept. So any of the bold numbers. Click on a bold number. There you go. Right, so that's an IFRS concept. And in this particular case, it's cash flows used in operating activities. That information is in English, but if you click on the label, we can change that to Arabic, because obviously that would be of more interest. Now, we won't go into the demonstration in full, but you can download that, put into a spreadsheet, download that, put into your model, and use that information to help make decisions. So that gives you perhaps a little bit of a glimpse of what XBRL is about. It's just one of the important standards in this space, helping move markets from a paper paradigm to a digital paradigm. Obviously, the other one that you will hear about a lot is ISO 20022, and that's also a very important standard. Standardization in this sphere helps make information comparable and usable, and in an era of artificial intelligence and big data, it must be in a structured form to be usable. So this is like getting to first base.
Thank you, John. And now Katrina Marshall, who's a policy analyst at the OECD.
Firstly, I'd like to thank UASA and Jalil Tarif for having us. The OECD is very happy to participate in this event. And our work on this is a broader view, a bigger picture than some of the examples that we've we've had so far. So we as an organization realize the potential and the opportunities for financial technologies and digitalization, and we've really put it at the forefront of our work. And given that this is fast evolving with various different aspects of policy and regulation, we need to assess quite quickly both the challenges and opportunities. And so in doing this, the OECD has set up a Going Digital strategy. And this involves our work across the OECD, financial and capital markets, but also taxation, education, and various other aspects. And within that, within the capital market and financial market space, our work and my work really focuses on two elements. This is the adoption and adaptation. So when we talk about adoption, it's normally looking at the adoption of new technologies by regulators and authorities. And then in terms of adaptation, it's looking at how policy making and regulation needs to adapt given these new technologies and how it needs to address some of the challenges and harness some of the opportunities given the use of these new technologies. So for example, something we can go into detail later about, but I'll give you an idea, is for 1 year we've been looking at the potential of blockchain technology for public equity markets. So within that we've assessed not only the use of blockchain by stock exchanges and regulators, but also mapping the potential for example, fully digitized IPO process and what that would mean for all stakeholders involved and whether or not that goes far enough to addressing some of the challenges that we see today. We have also set up an OECD Blockchain Policy Center where, among other things, we will look at the potential benefits of using AI, machine learning, and blockchain in supply chain management, but also enforcement and compliance in our current business models.
Great. Thanks very much, Catriona. And finally, to, I guess, the pointy end, someone in the investment business here in Jordan, Ahmed Tantash, who's the CEO of Jordan Investment Trust.
Thank you, Steve. بداية يعني أشكر هيئة الأسواق رأس المال العربية على تنظيم هذا المؤتمر الكبير وممثلة بشخص عزيز علينا بالأردن السيد جليل طريف. شكرا جزيلا. وإذا بتسمحوا لي أنتقل للغة الإنجليزية مع بقية البانل. So Jordan Vest, I am the CEO of Jordan Vest. Jordan Vest is a merchant investment bank, and we historically have done asset management, and we've done IPOs, we've done advisory work, we've done custody work, we've done brokerage through a subsidiary that we have. So we are a fully licensed investment bank in the international definition. We call it in Jordan Financial Services Company, regulated by Jordan Securities Commission. And you know, we were active in these services pre-2008. Unfortunately, post the financial crisis, the business of investment banking has slowed down. And it's been a decade so far, and we look forward to a better decade to come. Our other side of the business is we're also a merchant bank. And by merchant bank, we do direct investments similar to private equity. But we do not raise money. It's our prop money. And we do not have to exit within a certain number of years. So we source sectors and we invest with them for the purpose of growing them, either for dividend yields or for capital appreciation. And we can stay in this business as much as we can, as long as it is doing well. So we've done various sectors, including manufacturing, services, F&B, commercial banking, and so on. We're currently focused in 3 major sectors, which is education, schools, K-12, and the shipping business, and also real estate, a very much similar operation to REITs. And we look forward to seeing that regulated in Jordan, actually. So we've been in business since 1999 and look forward to 20 more years to come.
Great, thanks very much, Ahmad. So
If
I've
not
got
more.
some questions I'm going to start to ask the panelists, but if anyone during that time has questions from the audience, please just raise your hand and we'll get a microphone across to you. So if we start, I guess, from top down, if we look at a macro perspective. So Katrina, starting with yourself. So when you consider this technology revolution, or the fourth revolution, as some people like to call it, how does the OECD think about technology in the context of corporate governance frameworks? So if you look at it from that point of view, what's the impact on corporate governance of technology?
Before I delve into this, I think it's probably a good time to talk about our standards. So the OECD has in 2015, the G20 and OECD members, this includes FSB, G20 and all OECD members, agreed on a standard which is the principles of corporate governance. And a very important element in those principles is that they are supposed to be tech neutral. And so one of the things that we're looking at when we're looking at the opportunities and challenges that are raised by technological innovation, it's seeing them through the lens of these principles of corporate governance and seeing to what extent there might be an impact on those. So to talk a little bit about some of the challenges and opportunities, I think the opportunities are very clear, the potential is very clear. There are, of course, operational challenges in corporate governance that we see today that need to be ironed out before we can see the real potential, but the opportunities are there. Some of the things that are being trialed now, for example, that we're looking at is regulatory technology on the side of supervisory authorities, so supervisory technology, and this can help agencies around the world enforce reporting and compliance processes and regulatory processes. We're also seeing things like within that supervisory technology risk indicator dashboards, centralized data warehousing for supervisory reports, and allowing that technology can allow for early warning systems on volatility and other issues. And this is something that is being trialed or rolled out today, and the potential is there, but also, you know, in the space of blockchain, we've talked about it in the last session, but today one of the more incremental things where we really see a potential is on blockchain-based proxy voting. And actually now that can allow for traceability, but user-friendly processes in annual general meetings, and also through that and other blockchain-related systems, you can allow for tracking and tracing of beneficial ownership and related party transactions. On the side of challenges, I think we will all in this panel probably touch on them, and I'm sure through some of the questions we can go into more detail, but interoperability, scale, and cost are a number of things that we see. As we heard in the last session with Joe Michael, a lot of these are in the way the data is structured, the way it's put in, so I think this is something that needs to be an ongoing dialogue, and I think this session is a good place to have it.
And I think that leads very well to you, John. So your previous piece about data and also the amount of work you do with regulators at the moment, and something we mentioned this morning. We had a bit of a chat amongst us. Was about the data requirements of regulators. The data requests of regulators to investment managers, and the amount of data that's being asked of investment managers, and is that actually being used? Now, can technologies such as XBRL be used to answer those data needs by regulators, or the standardization?
Sure, you can pull in almost anything you want and almost at whatever level of granularity you want. And if you look at some of the macro developments within regulatory structures today, an awful lot of regulators are much more interested in receiving information that is coming directly out of operational systems almost at a transactional level, rather than receiving less frequent aggregate reports. But you can see the problem with that, right? What do you do with all of that information as a regulator? And I think that this is something that regulators right around the world are struggling with, as to whether they have the human capabilities and whether they have the systems infrastructure to be able to use some of this information. But there's another challenge as well, and I think the investment management environment is a very good example, which is that today you can't do anything in any organization without having a cyber element to it and being concerned about security. So to the extent to which regulators are pulling in information that might move markets where that information is held privately or maybe is held confidentially for a while, that creates a cyber risk. And some of you will have seen that just a couple of weeks ago, the SEC in the United States sort of reacted to that potential risk by deciding that certain information which they had previously said needs to come to the SEC at a very granular level. A lot of information that investment firms felt was pretty sensitive. Instead of coming to the Commission itself, the request is instead that it be pulled together, but that it be available on site, so the regulators can go and look at it on site. So that's an interesting reaction to a cyber risk, but it's potentially also an interesting reaction to the granularity question and what you can do with some of this information. We're at an interesting stage in technical development. Everyone uses the internet to shop, right? So we go and click on something that we might be interested in buying, and then we buy it. Oh, I bought this pair of shoes. Great. But I'm going to get ads for those shoes for another 3 or 4 weeks. But hang on, I bought the shoes. Why are you still advertising them to me? That's a pain. Well, that's because the technology hasn't quite caught up yet. And actually, before long, we'll be in a situation where we won't be advertised about the shoes because the company will know that you bought the shoes. No point in advertising them anymore. So we're just in this stage at the moment where we've got a lot of new technologies, but they're not all quite where we need them to be. And I think that's an example of that. They've got the potential to pull information together. Lots of people are doing extraordinary things with artificial intelligence to find new insights from a reg tech, from a regulatory perspective, but the full opportunity is not yet realized.
And I guess the ability to take in that data and to utilize it. I mean, I think this is one of the things we mentioned earlier today as well. We ran a roundtable in London at CFA Institute in London with a number of the large investment institutions there. And some of their responses to the data request were, we're going to dump the regulator with data. We're going to basically break the regulator through the amount of data we're going to push at it, which is not exactly a positive or a pragmatic approach, but it was a response to what they were feeling was just too much. And what are you actually doing with this information? But then if we move on to Ukraine, when we come across the software environment, I mean, when you're thinking about these technology advancements, when you're thinking about the sort of frameworks that are starting to coalesce around some of the uses of technology, how are you seeing that in the software you're testing? Are you seeing advances in the types of software and the progression of the sorts of issues that you're coming across from a testing environment perspective?
Yes, well, I think that standardization of information exchange has had a profound effect on capital markets and post-trade areas in general. I mean, the most obvious examples would be fixed protocol and SWIFT ISO standards, which are common across the industry at the moment, as you all know. And they have helped quite a bit to build trading and post-trade platforms and also test them and also to onboard clients. So, of course, we all know that for some low latency communications, many exchanges still use their proprietary binary protocols. From our experience as a company building tools to test such systems that use such protocols, it takes about 2 to 3 weeks to implement that new protocol into our tool and be able to use the tool to communicate with the system that we test. So overall, I can say that as a testing company, we are big fans of standardizations in general, and we think that machine-readable standards and specifications are a way forward. And specifically speaking about our company, we're working on 2 initiatives at the moment that are specific to standards. We are working, being a member of fixed trading community, we're working with FIX organization to help them implement their FIX orchestra suite of technology. And the second initiative is being partners with R3. We're working with that company on implementing a DLT-based implementation of ISDA's common domain model at the moment. So these are just some examples that I can give you in terms of our company and a little bit in general in that area.
Great, thank you. Thank you. So we've done a lot of talking. We've sort of covered a little bit, but in terms of data, Faisal. So data, and more data. So what are people that you're seeing in terms of how companies, how are they using data in terms of different solutions? And I think one of the other things actually that we touched on this morning, I think is important to bring up, was the structured versus unstructured data angle, and specifically the point at what point does unstructured data become material non-public information? That risk starts to sort of bear its head. Perhaps you can talk to that?
Sure, thank you. From our perspective, data can also be perceived as a burden sometimes because from NASDAQ's example, I mean, we generate about 18 billion rows of data every day. But I think the key question is what do you do with that data? We see opportunities, and I think capital markets sit on gold mines of data. I mean, clearing houses, depositories, exchanges sit on the gold mines of data, and we need to capitalize on that and try to monetize it. When it comes to, sorry, can you remind me the second point you mentioned?
Yeah, it was unstructured data.
Yes.
At what point it comes MPN?
Thank you.
Yeah, material non-public.
That's a very interesting question because when we look at Gartner's reports from 2017, it said that the world's data is about 80% of unstructured data. In our markets, we deal with trading data that is basically pumped from trading engines or from depositories for the ownership details up to, trading engine of who's the buyer, who's the seller, what the value of the share is, and so on and so forth. But there is 80% of data out there that is untapped. From a technology perspective, if we look at machine learning, for instance, if you teach a machine to decorticate the data and analyze it and then send it to data scientists for them to make informed decisions on how to package this data and sell it for investment firms and banks and so on, that does create wealth. I think the question would be here is what is the balance between the technology firms that capitalize on data and how do they work together with the regulators in order to make sure that that data is actually, or those solutions are in line with the major principles that are drawn into the industry. Another point about data would be how you store it. Is it cloud stored? Is it multiple cloud? Is it a hybrid cloud? So on and so forth. In my opinion, I think we're not doing enough in the region to capitalize on the data. How do you store it? I don't think a lot of capital market entities are open to the idea of rolling over their mission-critical software and data into cloud, because there are data sovereignty issues surrounding each member state. And that's also the case for European firms with the GDPR enforcement. So if you're a vendor as NASDAQ and you want to work with a European firm, you need to be able to use cloud that is in Europe. You can't use a US cloud because of GDPR. Yeah. So you have to adapt to that. So the question is, it's philosophical, and it basically boils down to what your priorities are and what your clients are. Other technologies that have to do a lot with data that can be capitalized on to the fullest is blockchain. I mean, it's an immutable record of ownership. You can utilize it for governance. You could track down from the start of a trade up to the execution of the settlement of that trade. You can trace down the whole thread, basically. So there is a lot of opportunities on how you can tap on data. And I think the question that is challenging us today in this framework with the regulators is how do we find the balance between us, as Dr. Abeid said, the regulators are catching up. So an idea would be to do the regulatory sandbox and try to encapsulate firms that develop new ideas and try to build regulation around that in parallel with the growth. So there should be some kind of balance at some point.
Yeah, and I think that's a good point. That was something that Ahmed, I think we were again talking about this morning, was the idea is at what point is regulation stifling innovation? So, trying to find this balance between essentially two paradigms. One where you've got the incumbent regulatory authorities who are concerned about managing, mitigating risk, protecting investor interests, right? That's what they're key on. And this technology revolution, which is more open source, more transparent, collaborative. And you'd kind of think that was where regulators should sit, but there's this balance of risks that they've got to mitigate. So from your point of view, sitting in the business here in Jordan, how do you feel about regulation as you try and innovate as a business?
Thank you, Steve. I believe we've gone a long way in regulation in Jordan, and Jordan Securities Commission have drafted a number of regulations a while back, actually, and they've been updated as we moved forward, and they are enforced on companies. So the question is, where is the right balance between the right regulation, over-regulation, and easier regulation, especially when you are going through some economic cycles. There is a you can over-regulate probably at the top of the cycle, but you need to have easier regulation at the bottom of it. And the question is, how do you balance between all of this, and how do you provide the right set of tools? And especially that so when you define SME in the US, you're talking about a company that is $300 million probably of capital, and when you define SME here in Jordan, you're talking about probably 3 million to 5 million companies of capital, and that gives you an indication of where it's relevant to the economy and to the size of the economy. And what I'm trying to say is that there is no one size fits all.
Yes.
And when we try to bring some regulation that is sometimes international, nothing wrong with it, it's great, but you don't want to over-regulate.
Yeah.
You want to make sure that there is a great balance, and that companies actually balance their time between compliance and between operations. And that's a great topic. I mean, we can spend a full day about it. Yeah. But if you may allow me, Steve, I mean, our markets in the region, and I see the audience mostly from the region, is a plain vanilla market. I mean, we do have securities that are issued, and it's done through brokers. We have exchanges, we have depository centers, we have regulators, and that's apparently a very traditional way of doing business. And the question is, is this model going to be disrupted? I mean, are the brokers going to be disrupted? Are they going to go out of business? Because I believe the disruption is coming. And when we talk about blockchain, what is going to happen to depository centers? And if we talk about distributed ledgers, where is the exchange on all of this? And then if we talk about, we're already, when you issue a security, you're securitizing a company by issuing securities, and right now they're called equity. Or if it's debt, then it's bonds. But if I don't think we want, maybe we do. I mean, if the price of an equity right now or a security is 1,000, you want to tokenize it to $1, then that's another topic. But is that what we're talking about? Are we doing this again? Are we securitizing the security, or are we securitizing assets that have not been securitized? Yeah. And then comes the question of jurisdiction and litigation and pledge and banks and margin trading. these are all very legitimate topics at this point, especially in a region that product is still a plain vanilla product.
But do you think, so if we open it up now, yeah, please, question, yeah. Is there a mic for the gentleman? And if you can just state your name and where you're from as well, please, that'd be great. Thank you.
Muwaffaq Al-Yafi, thank you for sharing all the information that I'm listening to. The issue related to challenges on digitization and all what's happening in e-government and how this is affecting the markets, financial markets, is all has to concentrate more on how to secure this information, how to secure the data. And we have previous experiences that proved its success. Let's take Estonia as an example, whereby they were breached, although they were a newly fresh market trying to digitize all their government, but hackers breached them, and they went to use two keys. One of them is the key public indicator, and the other one is the e-identity, electronic identity, whereby all this was linked to an X road, linking all the information related to financials, taxation, voting, all of this, and at the same time duplicating information in several places, however, without jeopardizing its security, through using one of them is the blockchain to make sure that no one is able to get into this information unless he or she is authorized to do so. And if someone did this without authorization, then definitely he or she will be sued for whatever act was conducted. So this is very much important to start thinking of benefiting from this new technique in developing our financial markets and facing these challenges. Thank you.
Thank you. Thank you. Any other questions? But otherwise, I'll keep asking here. Okay, so I think somewhat to that point, but really to Ahmed's last point about financing, so about listing securitization. So one of the other things we were talking about, and it's certainly a topic of this panel, was an ICOs and STOs and capital formation. So one of the things we've been seeing on developed markets is the reduction in listings and the increase of more mature companies coming to market, so the larger technology companies. So one of the things we were talking about was, well, are STOs going to be a parallel or a replacement financing? So rather than go a straight equity IPO or raise money in the bond market, would you raise via an STO? And is there an opportunity? Is that an opportunity in a country like Jordan? Does that open up opportunities here in terms of securitizing assets or securitizing companies that maybe aren't at the larger end and the listing rules are too onerous for?
So thank you again, Steve. I think we were talking this morning about when the market doesn't have legacy.
Yeah.
So it's easier actually to leapfrog
Yeah.
than to slowly move towards a certain target. I mean, it's public information that the stock exchange in Jordan is suffering liquidity. I mean, we used to trade $100 million, 100 million JDs a day, and now we're about 3 to 5 million JDs a day. So that's 3.7%, 3.7 to 5% of historical data, and definitely, I mean, when you are able to put your securities in a way that are marketable to international investors and reducing the ticket size, whereby you're actually inviting retail to the minimal investment size to come and invest in the market, then that will definitely create liquidity. Today, the investors are mainly local, and institutional investors, if they come or if they decide, to come to Jordan, or to Amman Stock Exchange, we have been classified as an emerging market as by MSCI, and now we're a frontier market. Yeah. So there is criteria for institutional investors, but if we create the vehicle and the tool for international investors, retail to come in, no doubt this will create liquidity. The question is, putting the current securities on the market is easy. You know, you can put the current securities on the market, but it's just the channel and the tool, and how do you do that? And how do you market it? The other thing is, how do you tokenize other assets that are not already on the stock exchange? And that's a big opportunity. That's a big opportunity. You take assets that may have not been listed at this point of time, and try to tokenize them using STOs, I mean, and just allowing international investors to participate. And instead of having 10 million people, you can have the world to invest in your equity, of course, provided that there is the proper standardization and trust in doing this investment.
And we sort of skipped over the move from ICO. So ICOs, we had this, and again, this conversation this morning where most of the people you talk to believe that the majority of ICOs are a fraud, in the order of sort of 90% plus. I think if you talk to most people, that's sort of the figure they tend to pluck out. But it was interesting in a conversation we had with yourself, Katrina, in terms of you looking at every ICO, what's 2,320 or something? Or 800 that had data, that you could find data on. So how have you seen the move? You know, we've moved from ICO to STO. Has that been a way of trying to address that sort of legacy issue that we had with that term, and now we need to move on to a different term because that had a bad reputation, and we've got to change it? Or has there been some structural changes that have really been made from moving from an ICO to an STO environment?
So I guess there are a couple of important elements in that, so I'll address them as we go. So coming back to the point about ICOs, so last year at the OECD, we put together a data set with exchanges from Silicon Valley for 2,350 ICOs, something like that, so initial coin offerings. And that represented somewhere upwards of, I think we saw X amount of billions raised, huge market size, huge appetite for this investment, but as you say, some of them are frauds. And so we went through one by one to see how many of these companies, between few in 2014 and 15, but mostly the bulk of those 2,350 were between 2016 and 2018. And we looked to see how many of these companies still exist and what do their operations look like. And we saw the large majority of them still exist. John made a very good point when I said this, that they might still exist, but the capital is not being used in the right way. So these are still, we can see what the sustainability of these businesses are. And there is too large a margin of those are not the businesses that investors want to invest in. And there are structural differences between initial coin offerings and these security token offerings. We are seeing there is more advanced infrastructure, there's more advanced checks and balances. There are protections that were not there in ICOs. And I think we haven't seen the same amount of money being raised, mostly because it's a newer phenomenon, but you're still seeing, I think there was north of US dollar 380 million raised in 2018 alone through security token offerings. So there is an appetite and there isn't as much accessibility. So I think it is something that, used in the right way, whether or not we see it as a business model of exchanges for them to integrate them with existing exchanges, but perhaps different new segments or new offers. I think this is something that we will see increase in the coming years.
Did you?
Just to pick up on that, I mean, if you look at the world's public markets, the number of companies, with perhaps the exception of China, that are going public have radically diminished. We've got a significant number of public companies that have gone private. Private markets are vastly more sophisticated, and you talk to a lot of entrepreneurs and they're very confident about their funding base because they know that those private markets exist. To be fair, those kinds of entrepreneurs are relatively sophisticated. given all the technology we have, and whether it's things like STOs, which may well fly, given the right regulatory framework, given enough trust, they might, but the level of distrust around the IPO market means that they've got a long way to climb. It's not the trough of disillusionment that Gartner's put them into. It's sort of, it's several miles below the trough of disillusionment. So whether it's STOs or something else that somebody in this room invents, there is a massive opportunity to take the fact that we can now move money, and I mean real money, around the world much in a far less frictionally mode than we used to be able to, and we've got ways of moving information around in ways that we couldn't in the past. If we have disclosure, if we have audit, if we have an ability to move cash, we should have an ability to provide capital to businesses that are growing. So that's going to be the challenge for regulators. What are the right combination of technologies, and what is the right level of regulation to ensure that those funds flow, whether that's international investment or whether that's enabling the retail investors in local markets to feel as though they can trust these opportunities. That's the challenge that everybody in the room, I think, really faces. And it's going to be a combination of technology and regulation that achieves that for the world.
Yeah, no, I think one of the things we saw, it must have been 2 years ago probably, I think, was the Kenyan government issued a bond over, you could access it via a smartphone. So you could actually subscribe to it via smartphone. I think the issue was a lot of the documentation behind it crashed the server, basically. Yeah. So, if you've got a smartphone and you're downloading all this document, it had a real problem. But it's one of those things that, as well, going back to the idea of leapfrogging as well, that, there is no traditional banking infrastructure to the same extent that you have in some of the developed markets there, but you do have a strong mobile market, and using the mobile technology, that helped. If you look at inclusion amongst the local population, that gave access to something. Okay, it didn't work that great the first time around, but they'll go back and it will get better. Faisal, I think something we did mention this morning, though, I did want to pick up on, was this concept of platformification and open source architecture. So if we move back again more to on the software side, and how that is changing from traditional, as you said, these enterprise systems, these sort of weighty, costly systems, to something much more fluid and flexible for businesses. You can talk to that.
Right. So that comes as part of our overall technological infrastructure strategy going forward. There is a lot of advancements around the world with startups growing, building new, really nimble software. And we can't just sit back and look at it and then lose the business going forward, because if we stick to the enterprise software, it's something that is dying. I mean, we could see it, for instance, if you compare the Oracles with the Workday, which is a subscription type of software that can manage everyday working conditions. That has grown over 500% over the last 2 years, whereas the growth with Oracle was really minimal. So what we mean by platformification is to decorticate the monolith software. Let's say a matching engine that a stock exchange wants to implement would take a year to put together and build and deliver to the client, and then that would be most likely something that is very unique to their requirements. We all understand that we have different business requirements, we have different rules and regulations, but if you can build something in a platform that is based on a platform as a service, and you can create a commercial model that is very appealing to a client to go in and subscribe to. So the vision basically is to have that open source software built on a platform that is run by NASDAQ on a cloud that is provided by a third-party cloud provider, perhaps on multiple locations, and a client being able to build their own in-house solutions and connect them through APIs that are built by a third-party vendor, and maybe a test software provider that is also part of the platform. So that's what we believe the future of the technology is going to be. And I don't think we're afraid of the fact that open source can create, new rivals in the market. I think rivalry is healthy. And I think if we can work together, we could perhaps discover new things and build new wealth in the industry. The other thing I wanted to mention is the convergence of software. We've been talking about DLT and blockchain, which is a purely financial discovery, let's call it, right? And that's used by various different industries today, from the shipping industry for their bill of ladings and smart contracts and things like that, to the financial sector. But we also are taking advantage of solutions and the technologies that have been built by other industries like telecoms with the cloud and the various different array databases that were built for in gaming, for instance, and graphic structures. So I think this convergence is key to acknowledge by our visionaries, at least at NASDAQ from our perspective. When you talk to our CIO and CTO, that's what they're looking at, is data conversions, technological conversions, open source, cloud deployment, collaboration. So that's how we see things are going in the future.
Okay. And Kirill, then, are you actually working with, so when, I mean, and Faisal touched on it earlier about the regulatory sandboxes as a way of testing some of the technology within a safe environment that the regulator is monitoring, has some engagement with. Are you doing getting involved in some of that testing at the regulatory sandbox level as well with regulators? Are you working around them to help them in terms of what they should be looking at from, I guess, the robustness of the software to make sure there's no risk in the actual software itself, given that's not their domain knowledge?
Yes, so as a company, we're starting to reach out to regulators. As was mentioned in our introduction, most of our clients, some of our clients are regulated by FCA and Bank of England, and the rest of them by their colleagues in other parts of the world. So obviously, we understand as a company the importance of working with the regulators. Right now, we're just starting the process of reaching out to them. We are taking part in various conferences in Europe and around the world who involve representatives of the local regulatory bodies. And we start to educate them about the testing that we do as the company, our way of testing, our model of testing our client platforms, and the difference between the real testing that our company does, or we think that we do, compared to what we call fake testing. And it's an interesting topic, and we're probably almost out of time. Yeah. And it would be a topic of a separate discussion. But the main point here is that it's not enough to just go through box checking, completing a questionnaire that the regulator supplied to a regulated company, and box checking, and here we are, and it's all done very quickly. And some people call that testing. We look at the testing as a science, and it involves a lot of effort, a lot of knowledge. A company that provides testing services for the financial market needs to have a very strong software development capability within itself to develop tools for testing, and the testers in such an organization need to have a lot of experience and expertise in testing the financial software for companies that work in the financial services industry. So there are a lot of components that constitute proper testing. One other important thing is that, of course, testing needs to be independent, because by definition, quality assurance program is meant to provide objective and independent information about the real state of software and whether it's ready to go, ready to be rolled out into production, and raise the confidence in the stakeholders by providing also the by explaining the risk of failures of such software in production. And it it ties into a whole separate discussion again about the mindset that the professional testers should have. We believe that there are people out there, including some testers also in some organizations, that expect the system to work just fine. Professional testers look at software in a completely opposite, different view. Professional testers expect the software to fail. And that's the mindset that we foster in our organization when we, hire new software engineers and teach them how to be testers. And that results in better software when it's moved into production, and technology advancement in the long run.
Great. Well, unfortunately, Jalil's given me the sign. So you mentioned time, and unfortunately, whoops, we're out of it. I almost got turned off. So I'd just like to thank you, Waisru, again for the opportunity for everyone to speak. And as you can say, everyone has got such vast backgrounds. So we're all going to be around later tonight. So if you want to ask anyone a question, feel free to pull them up tonight. But with that, I'd like to thank the panelists and everyone in the audience, and wish you a good evening.
Thank you so much.
Thank you.
شكرا